Mid-cap index is doing better actually, up almost about 40 points. But now the Nifty is inching lower, so 24 points lower. The Sensex is down about 65 odd points. What's dragging the index today is Infosys yet again. Infosys is your biggest Nifty loser, down almost 1 odd percent, followed by ONGC, Divi's Labs, Hero MotoCorp and Dr. Reddy's. So a couple of these pharma names also under pressure. Divi's Labs is now down about half odd percent. ITC is sulking just a tad bit, but it's had a fairly smooth run. I mean, it's up 20% this year already. Just a tad bit under pressure as we speak. Nothing alarming. Kotak Mahindra Bank, Sun Pharma, SBI Life, a couple of other stocks that are trending in the red right now. What's on the green side is metals. Tata Steel, Hindalco, all looking pretty good. You have Britannia, L&T, BPCL also in the green. Eicher Motors has been trending higher lately. M&M is looking good. Grasim, that was one of the picks that Sanjeev Bhasin had given a while back. Grasim is in the green. Tata Motors, Axis Bank, HDFC Bank are a couple of other stocks that are not looking too bad. Otherwise, it's a very, very quiet market. Just marking time around the 17,600 level. In the broader markets as well, barring something like an ICICI Lombard, there are no major reactions either way. Nigel will, of course, talk about that. But otherwise, really comatose sort of a market opening.
Indeed, Sonia. But, you know, there are those select stocks that are doing well, actually, from the broader market. So, Piramal Pharma, that stock's up closer around 5%. Or remember, the stock is nearly a third of what it was when it listed. But this morning, it's reacting to news that the US FDA has concluded its inspection and they've issued an EIR report. That's the Establishment Inspection Report. So that's one of the big gainers from the broader market. A couple of other notable movers today. ICICI Lombard, that's reacting negatively to its set of numbers. So that comes up for you on the screen. You have Tata Coffee as well. That is also reacting to its set of numbers. So that one as well should come up for you on the screen. For the time being, it's a little bit higher. The numbers were more or less flattish. Few more stocks that are on focus. Som Distilleries, we had the management who joined us, a couple of weeks ago, and they were talking about the enhanced capacity. It's come on stream in Karnataka, and in fact, in the last 1 month or so, that stock is up nearly around 15% or thereabouts. So good going on that stock. So otherwise, a quieter start, but a few stocks, they are bucking the trend today, Prashant.
Absolutely. Maybe we can look at, something like a Yes Bank. It's coming up on my screen with some volume-led activity. We'll see if there is, okay, 1.5%. It's quiet, I think, as both Sonia and Nigel have been pointing out. Despite some of these sort of jumpy kind of moves that we just highlighted. For the index, it's kind of flattish on the Nifty as well. The Sensex, the mid and the small cap part of the market is doing much better. Those indices are in the green. And we should just take a very quick look at the Nifty Bank as well to see what that is doing. Nifty Bank yesterday kind of did not have a negative close. It's the stronger of the two indices between the Nifty and the Bank Nifty. We've got about a 50-odd point move. That's flat, I mean, for an index at 42,000, 43,000. Mid-cap, small caps doing better. Look, too early, but maybe we can still take a quick look at the market breadth overall. The advanced decline ratio and see which way things are. And then we'll bring in Gautam Shah, who's waiting by, I think, market breadth on your screen in just a bit from now as well. There you go. 1,500, 1,600 stocks are higher, 640 stocks are lower. More on that in just a bit. Gautam Shah is joining us now, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thanks very much for your time as always. So we had a very nice 1,000-point up move, Gautam, and I think it came quickly, as these moves often do. Then sort of results have come through, a few, especially from the IT space, which has spoiled the mood a little bit. Global markets, no real big indications one way or the other. Which way, near term, near to medium term, according to you from here, Gautam?
Good morning, Prashant. Well, I don't think the markets have a trend because while everybody talks about this 1,000-point recovery that we've seen in the last couple of weeks, let's not forget in the first half of March, you had a similar 1,000-point fall all the way from 17,800 to 16,800. And, there is a saying, a rising tide lifts all boats. I think that's really what has happened in the last couple of weeks, because there was this wave of negativity and, short positions in the market as we ended the month of March. And I think all of that has pretty much got nullified because the market has not allowed you to really maintain a cautious or a bearish stance. But having said all of that, I think as a technician, I do believe that the area around 17,800 is extremely important. I still don't have concrete evidence to say that the worst is over and that one can go all out and, create investment positions for the next 3 to 6 months, because this is looking like a market which is very dynamic. It will see sporadic actions both on the way up and on the way down, but the index is unlikely to have a trend. But for me, I think till the Nifty does not really get past 17,800, 900 convincingly and on a closing basis, I would still be conservative and a little cautious. And on the downside, I think we are watching this important support of 17,500. So if at any point of time this breaks, I think the bears can be back. So what we are actually doing is we are simply ignoring the headline indices, the Nifty and the Bank Nifty, and concentrating on stocks, because there are multiple stocks and sectors which are standing out and which are likely to do well irrespective of the market action.
So what are these stocks? I mean, I take your point entirely, Gautam. You know, this is a market where the headline index is pretty much not doing anything. It's very, very range bound. But there is plenty of action beneath the surface. So tell us, where do you see outperformance? Where can alpha be generated now?
Well, there are a couple of sectors which have come back beautifully in the last couple of weeks. I want to obviously start about pharma, because it was a sector which was in a mega bear market for almost 18-20 months. So that index has come up really well, and I see further upside. This finally looks like a turnaround for good. You know, there have been multiple turnarounds which failed in the last 12 months. But this turn, I think, looks very, very good on the charts. And I do believe that the pharma index can give you anywhere between 10 to 15%, even from these levels. Secondly, I think we love real estate. I think it's always was our favorite in the last 2 years. It's just that because of the market correction, the index came off. But the big boys actually, stood out. I mean, look at a DLF, look at an Oberoi Reality. Despite the market weakness, they stood out really well, and now it's coming back quite strongly. So real estate, I feel, is going to be the theme for the next 3 to 6 months. Across the board strength is what I'm looking at. And I would top that up with PSC, the entire PSC basket. I've been a big fan of it for quite some time now. And I think every time there is a dip, there is this rebound. So the typical Coal Indias and the NTPCs and the power grids of the world, and add maybe a few PSU banks, I think this entire basket looks good. So these three would be our best bets at this point. And obviously, to add capital goods, the only sector which did not fall in this 4-month downtrend that you saw in the recent past. So these 4 sectors, I think, stand out for me.
All right. Hi, Gautam. Good morning. Always good hearing your thoughts. So pharma is bracing to come out of that multi-year lull. So let's see how that goes. 10 to 15% upside even from here. What about the IT index? That's been the big underperformer this year, particularly in this month. Your view from here?
Agreed. I think the Infosys results has not helped. But if you really go into the mid-cap IT space, there hasn't been too much damage. Most of the mid-cap IT stocks have actually held out. I can give you a lot of names, a Persistent, a Cyient, and whole host of names which have done quite well in the mid-cap IT space. Large-cap IT has been a bit of a problem, but I see it as an opportunity for long-term investors. I think whatever negative was there is already out pretty much after the recent results of Infosys. And I think from these levels, you really cannot lose money as an investor. So there is no trading opportunity as I see in IT. But if you are having a horizon of 12, 18, 24 months, I think these are good levels to chip in. And that's what we are advising to our clients at Goldilocks.
45 points lower now on the index. We're I think at the low point of the morning, 17,616 is where we find ourselves at. Piramal Pharma is, I think, the only one which I can, reasonably large name, which I can see with any big gains on it. That's up 7% or so. Yes Bank has moved up a little bit. It's up about 4%. And there is Prestige Estates, which is up about 3%. KRBL, PNB Housing are some of the others in the 2.5% range. The security services company SIS is up about 3% or so at about 390. Gautam, what's your view on two things? One, I mean, I don't know if you've looked at the dollar index. Many believe that's on the verge of giving a break below 100. And what will it do? What will it mean for metals and steel in particular, in your opinion?
Well, yes, I think there is a lot of talk around the dollar index, but I just feel that the intermarket relationship between equities and Indian equities and the dollar index is not so much. So I would not be a big fan of saying that because the dollar index is going to fall big, equities are going to do well. I think that's unlikely to happen given the relationships of the last 3 to 6 months. But I think more importantly, I'm watching the USD INR. I think, that's been stuck in a range for about 4 months now. And if USD INR were to break 80, 81, 81.5, I think that will be a big thumbs up for the rupee. So that's something which I'm watching very closely. And on the metals, well, it's been an underperformer. It's seen a large fall Even in the recent 1,000-point recovery, metals haven't really participated. And I do believe that it will find selling pressure at high levels. And if the Nifty were to get into a downtrend once again, which is possible, I think metals will be the punching bag. So stay away from high beta is the call. Stay away from a typical bank or a metals or even a Reliance Industries. 3 big pockets of the market which are high beta, I think should be avoided.
This year, surprisingly, the stocks that have performed the best are the auto stocks, right? I mean, Tata Motors is up 20% this year. Who would have thought? Bajaj Auto is up about 16%. So they are rising from the ashes, so to speak. But do you see further upsides in these names?
Well, last time when we spoke, I was not too positive on auto, but I think selectively the turn has been very good. I think we continue to like Bajaj Auto. In fact, we recommended it to our subscribers some time back. We also like Tata Motors as a slightly more longer-term story. And I think after the recent fall, the risk-reward just got very, very lucrative. And Maruti and M&M have also held out really well. So these 4 stocks, I think, stand out for me. But again, if you are somebody with a 6, 12, 18-month time frame, then you could dabble into them. But from a trading perspective, I still feel that these are high beta. And if the market's correct, they could come under pressure once again.
Okay. Anything else that you'd want to leave us with? The one space, and of course, we're going to talk about that in just minutes from now, is FMCG, right? ITC, of course, has been at record highs. You've had a good growth in many of the other FMCG names. Do you think this is a space to reckon with? Would you put more money to work in names like ITC?
Well, ITC is just holding the index, single-handedly. A stock that we really liked for a very long time. And I do believe that it is going to do bigger things, from here. So we like it as a hold, maybe a buy on dips. But another space which I think investors should look at, and I spoke about it last time as well, is gold and silver. I think it's a matter of time before gold starts hitting new lifetime highs on the international prices, which is past 2070. And I see a possible 20 to 30% move on silver towards a level of $29 to $30. So equities, I think in general, is going to be in a range for the whole of this year. But gold and silver is clearly in a trending move up.
All right, Gautam, thanks very much. And those intermarket divergences are absolutely right. I mean, gold has been moving up, but the gold finances have not been. Used to be a time when there used to be a pretty tight correlation, but not anymore. Muthoot is doing what it is doing. There are other factors, of course, which were not.
Actually, some of them have moved in tandem. If you pull up Manappuram, you pull up Muthoot, the last 1 month, and even CSB Bank, from the banking pack, though the Nifty Bank is not at a 52-week high, CSB Bank is 50%. Yeah. We had the management who said.
But I'll tell you, Nigel, something. I think CSB is about 40% gold loans.
45. No, it's around 45% right now.
But Muthoot is the most pure play gold finance company. I mean, they do a little bit of microfinance, and that's the reason I was only making the point that when gold prices move, Muthoot and Manappuram see large moves, which has not been the case. CSB, of course, has done well. Muthoot as well, I think, from the lows of, low was 900.
Yeah, even
the fall has been, Nigel, so great, right? From 1700 down to about $1,000 or so. So
even Manappuram, I think we should pull up the last 1 month chart because
it's moved up a little bit.
Yes.
By the way, ICICI Lombard, guys, right? I mean, I don't remember the last time that stock reacted in a positive way to a quarterly earnings set. It's just, disappointing. The 2 segments there, auto and health, both have been suffering for a long time. And Surabhi was highlighting this right before markets open. The stock's down about 3% on very large volumes as well. So 950, that chat with the management comes up. So there you go. So 1,096 on ICICI Lombard right now. Sonia.
Okay. Now I just want to make this point, after such a big rally that gold has seen, Gautam Shah sticking his neck out and saying that there'll be an additional up move. And this is still a good time to buy gold. It says something about that asset class. He said silver will rise another 20 to 30% from here. This is on top of the rally that we've already seen. So that says a lot about risk aversion towards equities and the move in gold. But let's focus on the FMCG and consumption space now. In Q4, volume-led growth is expected to return in the FMCG sector with a gradual improvement in rural demand. Now, according to Prabhudas Leeradhar, the demand is expected to be mixed in the consumption space, while margins will improve in Q4. We have Kumar Rajgopalan, who's the Chief Executive Officer at Retailers Association of India, and Amnish Agarwal, the Head of Research at Prabhudas Leeradhar, joining in now to tell us what to expect. Amnish, let me start with you. If you can just lay down for us, the preface to this discussion. What is the kind of growth that we're looking at? Have you seen a recovery in the rural market, especially in the consumption piece? And which are the stocks that could be the biggest beneficiaries of this?
There is a lot which is talked about rural recovery from quite some time, but our understanding suggests that there is no full-fledged rural recovery which is playing out as of now. Because there are, for example, the discretionary pack in the rural India is under pressure not only in consumer staple but in consumer discretionary durables, etc. as well. And in case of, you can say, your staples also, there are certain, you can say, items in food products or maybe your detergents, etc., which are showing uptake. But so in rural India, I think it is not a broad-based uptake or green shoots which are visible because of, you can say, the inflation which has been there. Yes, of course, the earlier down trading is somewhat winding up, but there is no clear visibility as of now, and a lot depends upon how this crop goes and how the monsoon season plays out.
Okay, that's important. You're saying that there's no clear visibility on any improvement in rural demand and there's still a bit of uncertainty. Kumar Rajgopalan, who's the Chief Executive Officer at Retailers Association of India, is also with us. Kumar, would you concur that there are no concrete signs or evidence of a pickup in demand just yet in the rural market? And can you break it down for us in terms of, what you're seeing in retail trends, both in urban and rural, any divergence in trends across regions, north, south?
Yeah, hi, good morning. I think I'd agree with what Amnish is saying to some extent because we've seen that through the year, the real growth has happened in the mid to higher segment of products, which means the price points of mid to higher segments. The lower price point items, especially in the discretionary, has not done as all that well. I mean, overall, the retail market grew by about 18% last year for the modern retail. But the issue has definitely been on the lower price point items, and I think that's seen across various levels. Some of the items that did well, some of the categories that did well, definitely sports and leisure, athleisure has been doing very well. QSR has been doing quite well. People do want to go out and eat. Garments, when it came to occasion wear, has done well during occasions. The non-occasion times, especially when it came to lower price point items, have not done well. The rural sector, I think, still needs to be really reached out, and I'd agree because the lower price point there again is the question. The mid to higher price point, I think those consumers are willing to buy, but they also buy from the larger cities. So they are willing to go to the cities and buy lots from wherever they are if they are well-to-do. So there is that question mark that still is there. I think that impact of inflation of the 10% was definitely seen all through.
All right. Hi, good morning, Mr. Rajgopalan. We have big state elections coming up this year. Is that a factor? How do, consumer trends normally phase out when we have state elections and large states as well?
Yeah, that's a very nice question, actually, because we hope that there would be lots more money, disposable money in the hands of people. And you'll need to bring in some policy level decisions to make sure that people feel the ability to buy, or at least they have this confidence that they are going to be in a better position going forward. Retail is all about expectations of where one would go the next year and the year after that. So the election should hopefully put some money back into the infrastructure and various other systems, because people will be very busy to try and make sure that that expenditure, the whole infrastructure, the ability to try and make the last person be employable is all going to happen. So we'll have to wait and watch. But one good thing about what's happening all around is that there is DBT, there is lots more accountability. So whatever is being seen in real terms and not just about doles. So I think that's going to be interesting.
Okay. Amnish, from the universe that you cover, what are the companies where you're seeing, both revenue growth as well as margin expansion in this quarter? And perhaps stocks where there continues to be a little bit of valuation headroom as well?
Okay, see, in terms of volume growth, I think in this quarter, paint companies should do well because the trends of January in paints, they are sustaining at least till the end of the March. So paint is one segment where we should see good volume growth. Then ITC should have good volume growth. In general, food companies selectively should have good volume growth. Liver should be able to give you something like mid single digit kind of a volume growth. So I think these are some of the pockets. QSR again should be mixed with some pressure definitely on companies like, say, Jubilant Foodworks and Westlife. Jubilant Foodworks and Burger King. Westlife, I think, should outperform the peers in QSR space. So broadly, I think paints, selective staples, and selective, you can say QSRs, they should do well. As far as margins are concerned, I think clearly at this point of time, it is again very you can say company specific factor. The companies which are more using the raw materials which are crude linked and which have seen softening in the past 3 to 6 months, for example, the paint companies, the companies like say Pidilite, so they should gain. Some of the companies like, for example, Lever, which have got large gains to come due to reduction in the prices of various crude linked items, as well as palm oil, they should gain. Britannia should report YY margin expansion, although QOQ it looks difficult. So I think broadly, if you look, I think there would be reasonably good quantum of companies which will show margin expansion. But in some of those cases also, one can't rule out some margin.
Oops, okay, I think there's some issue with the audio over there. We'll come back to you in a bit. You know, Mr. Rajgopalan, anything that you want to leave us with in terms of what some trends could be in the consumption space? Anything that we missed out on? Any pockets that are perhaps looking good to grow from here on?
Yeah, I think the good news is that the customers are back in the stores. I think they are wanting to buy online, they're wanting to buy offline. Both is happening. Omni-channel has become the way of the day. So it's gone are the days when one would say only one channel is going to grow. I think both the channels will grow. Trust is becoming very important for buyers who are buying whether offline or online. So you would see that lots more D2C brands are trying to put offline stores also there, because customers want to know whom are they buying from. Gone are the days when people would say that easy returns is very happy status because that's convenience, but frankly any customer who is returning is not very happy with what they got, and that's going to get questioned through the year. If there are lots of returns in any of the e-commerce websites, it's going to be a big question mark. The growth that we expect will hopefully be in the garment sector. It's not done as great as it should be, and I think that discretionary item is the first thing that gets to kind of see the results. Footwear is growing very well, and I think that should really continue as we go ahead overall. QSR should continue its growth path. Again, I think that's also done really well so far. CDIT is going to be quite interesting because consumers are going to stores and buying. We are seeing new brands getting launched, but there is also this question, how much is good enough? So there are people who are questioning whether consumer durables and IT products are really going to grow that more than 20%, or is it not? We'll have to wait and watch on that account. One important part that we'll need to wait and see this year in this country especially is this concept around the open network for digital commerce. I think there's a lot that's happening around that. I think this is going to democratize digital commerce, and hopefully it should take in the kind of trajectory that UPI has taken across for the payments in ecosystem, and that's going to be really interesting for consumers as well as for the overall market in India.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. Let's do one thing. Let's take a quick break on that note. On the other side of the break, lots more coming up. Very quiet day for the market. Very quiet opening so far. But lots on the market and individual stocks coming up in a bit. Stay tuned. On the other side of the break, Abhishek will be analysing expectations from the NBFC sector in Q4. We will also be connecting with Nishchin Chavate of Kotak Institutional Equities to discuss expectations on the sector. And in a bit, we will connect with Gopal Balachandran, who's the Chief Financial Officer and Chief Risk Officer at ICICI Lombard, to discuss their Q4 earnings. Stay tuned.